Mishra, MD and CEO at Shoppers Stop, joins in right now to talk about how their quarterly performance has been. Mr. Mishra, your net loss continues to be sticky around 20-odd crore rupees, and it's actually inched up on a sequential basis. Tell me what's been weighing on the profitability.
If I break this performance into two parts, one is on a core business, and I think from this quarter onwards, we have started speaking about that. So last year, we had a PBT loss of 12 crores in Q2 in my core businesses. When I speak about core businesses, it means the departmental store business, it means the ss.com, which is the Omni business, and our beauty business. So from a minus 12, actually, we have converted into a plus 9 crores. So it's actually a swing. We have done exceedingly well. It is our new venture, which is our the new website which we have launched specifically for beauty, which is called ssb.in, and Intune, where we are right now making investments where actually the losses have increased. So while the cumulative looks more or less the same, if we break it into the core business, as I mentioned, is doing exceedingly well. And from a minus 12 PBT, it has converted into a plus 9 PBT. It is the newer ventures where the losses have gone up from minus 11 to minus 27, and that is primarily based on investments of opening up new stores, front loading the investments. And we feel that this investment phase will continue for some more time, and we hope to see break even in the new businesses in FY27.
Okay, and the beauty segment grew around 22% YOY, 3 new outlets which have been launched as well. Do you plan to accelerate this expansion, and what contribution do you expect from beauty in FY26? Give us a sense.
So as we speak, we are around 22% in terms of contribution of beauty business to our whole segment. A lot of that growth is also driven by Global Beauty GSSB, which is our distribution wing, where actually we have been doubling the revenue. The premium lines have also started doing well, and we are seeing a good like-for-like growth there as well. My sense is that 22% should move up to by at least by 200 basis points by the end of the year, and we'll keep on investing in the beauty business. As you know that we have signed an exclusive partnership with NARS and Armani and Prada for the India market, and we will continue to invest. As we speak, I think we are working on expanding these brands. These brands are very choosy about the kind of stores and the malls they want to be in. We have opened Armani and Prada stores in the last quarter, and we are looking at opening a couple of them more going forward.
Right. And with 6% growth in the customer entry, tell me how are footfall trends looking like when it comes to tier 1 versus tier 2 cities?
Okay, so what we see is that the growths are secular. We are seeing customer entry growth more or less similar trends in both tier 1 and tier 2. I think the good thing is that, and I think that's something which is very special, is that the growth is happening across all regions. It is not that a particular market is doing well because of a festive or anything preponement or otherwise. We are seeing the growth in footfalls across the markets. 6 quarters back, we were looking at a negative 6% like-for-like customer entry growth. Even last year, Q2, same time, we were negative customer entry growth. And very happy to share that with sustained efforts around marketing, curation of lines, the personal shopper, the services which you offer, the premiumization, this has become positive and it's very strong. And what we see going forward also is that even the current festive looks very, very strong. So we are seeing strong customer entries across tier 1 and tier 2 markets. And it is broad-based and not limited to a region. It is happening across.
And you mentioned in your presentation that you're seeing cautious optimism with measured expansion. With GST cuts and festive season underway, why are you still cautious, and what is the measured expansion plan? Give us a sense.
Look, I think as a business, we tend to be a little conservative in the way we look at things. Having said that, as I mentioned, festive looks very, very strong. In fact, our earlier commitment in terms of opening of stores for departmental stores was limited to around 5 to 6 stores in the coming year, 2 quarters. But I think now we are looking at close to 9 stores. So there is optimism. There's also a belief that what we are doing is right in terms of gaining market share. Which, as a business, I think we should always be a little cautious in the way we invest, because retail tends to change very frequently. But I think there are a lot of tailwinds in the business right now.
Right. Great to have you then on the show. And thank you so much for highlighting how your quarterly performance has been and what really is the visibility going forward. Let's take a very quick break. On that note,